Friends, hope you're doing well. Brian Harris here. I am working with a teacher getting them pre-approved. So I put together some loan programs for them and I thought it might be valuable to share with all of you as well. So what I'm going to do is just a quick and dirty video. What that means to me is I'm just going to take 10 minutes to shoot it, 10 minutes to edit it. I'm going to put it out and hopefully you find some value in it. But of course I do have to make an awesome intro video first. So check that out and then we'll get into the numbers. Okay, the first loan I wanted to talk about is the CalHFA loan, or CalHFA. I've heard it pronounced both ways. Potato, right? So it stands for the California Housing Finance Agency. Okay, so this is specific to California. For those of you not in California, you could still watch the video, but reach out to your local lender who I would assume has a similar program in your state. So the first loan can be a conventional or an FHA CalHFA first. The second loan will be a 4%, it's called a teacher loan, 4% that can go towards your down payment or closing costs. It's called a silent second because it's in second position, but you don't have to make a monthly payment on it. So there's no principal or interest payment. When you sell, refinance, or pay off your first, then it becomes due at that time. There's, like I said, no payment on it, but there's interest of 2.5% simple interest that's added to the loan, and that sits in second position. Okay, so for the loan I put together, there's also a third loan. The third loan is a 3% zero interest program loan. So it's 3% of the loan amount, but there's no interest charged to it. It just sits there. Again, it's due when the loan is refinanced, the property sold, or the first loan is paid off. So you have those three loans. You can end up owing more than you're paying in the purchase price, but what's awesome is you can essentially buy with no money out of your pocket. You can work it where that happens. In the example I've provided, they have a little bit of money out of pocket, but it can be moved around, so it's essentially no money out of pocket. There's income limits. Can't make too much money, but you need to make enough money to qualify. So there's that sort of window that you need to be in between, and this loan will work for you. The second loan is the GSFA Platinum loan. So that's, again, it's a separate California agency. So sorry, those of you not in California, this is a California only loan product. But what they'll do is they'll give you up to, depending on the first loan you pick, up to 5% grant towards your down payment. So this grant is no interest, it just sits there. After 3 years, if you are still in the loan, then it's forgiven and it turns into a gift. So that's really cool. But it gets better. For teachers and other select occupations, you get your grant forgiven on day one. So it's truly a gift. They're giving you 5% you can put towards your purchase. So you can do a 3% down with a 5% gift, and that extra 2 goes towards the closing cost, and come out with a very small, if any, down payment. So that's another really cool program. One thing to mention on these first two products is that the loans are set by these California agencies. So they're not set by the lender, and the rates are higher, typically higher than what you could get in a conventional or an FHA loan. So they're great programs because you can buy with a lot less money down. Some cases no money down. But the trade-off is that the rate's a little bit higher, and so you got to weigh those pluses and minuses. Okay, the third loan I presented is the Fannie Mae home ready loan. So this is not specific to teachers, and there's not a down payment assistance tied to it. So this is available to anybody who wants to buy an owner-occupied purchase. So it's not for an investment property or a second home. It needs to be the house you're going to live in. There's income restrictions as well, but it's tied to the property. So the property we would check, and we would say, okay, this is the income limit for this property, just picking a number, 86,000. Or there's also quite a few properties, especially in Ventura here, that have no income limit. So that means doesn't matter how much money you make, you can qualify. You're eligible. So again, you need to make enough money to qualify, but you can't make too much money that you're not eligible for the program. So the home ready loan is a 3% down loan. You can do a high balance when the loans get a little larger, where you have to put 5% down, and it has reduced mortgage insurance. One thing to add on the CalHFA loan, if you're not a teacher, there's a different down payment assistance program that's for first-time home buyers. That's 3.5%, and it works the same way. So if you're not a teacher, but you're a first-time home buyer, you have that loan program available where you can get a first, a second, and a third, basically nothing out of pocket through CalHFA. Okay, the last option is a 20% down conventional loan. So really it's just as a comparison to the others. So the benefit is you have a smaller loan because you have more money down, and you don't have any mortgage insurance. The first three options do have mortgage insurance, but as you can see, it's a lot more out of pocket to purchase. So that's it. Thanks for watching. Here's the analysis I sent this borrower. I took out her last name and just made it clickable for everybody. So this also shows like how I present loan options to borrowers. Hi Katie, it's Brian Harris. Hope you're doing well. Thanks for sending your information to me. Thanks for your patience and letting me get back to you. So I want to go over these loans real quick. They're all $450,000 purchase price, so they're all the same purchase price and then different loans. So the first one is a CalHFA, it's pronounced, teacher loan. If you do click this link, you can click more detail. It'll break out the payment. It'll break down all the closing costs, so you can see exactly what it looks like to purchase a property worth $450,000 with these 4 different loan programs. So hope this finds you well. Thanks for watching. Until next time, don't forget to hit subscribe. I need to get to 100 subscribers, please. Thank you very much, and have a great day.